We're going to talk about capital markets and new developments between Saudi Arabia and Hong Kong. As we know, the city is emerging as a gateway for Middle East capital flow, and we're talking about the new developments and policies and what opportunities they bring. So Hanan, for starters, can I ask you to set the scene of what's happening in Saudi Arabia capital markets and the role that your firm and you play in it?
Thank you, Lulu. First of all, it's my pleasure to be with you here today. The sessions in the morning were really insightful and educating with a focus on the Asian markets. So it's my pleasure to share some overview and insights for my side of the world and our market, which is the Saudi capital market. And to start with covering briefly the Saudi capital market. So it has undergone a fundamental transformation over the past decade to evolve into one of the main emerging markets, globally speaking. The vision that we have, Vision 2030, which we have it on a national level, has been a main driver for this growth. And the vision has put the capital market and having an efficient capital market at its core for economic diversification and having the funding that the private sector needs. So our market today is sized at $2.6 trillion in terms of market capitalization. And to look at the Saudi market, we don't focus on the size, but the growth of the market overall. And this growth has been governed and driven by, I would say, three powerful engines. First of all is the supply side evolution. So again, the vision is moving, first of all, public assets or state-owned assets into the public hands. Aramco is a very good example, and then the logistics companies, etc. The Saudi market today is one of the top markets globally in the number of IPOs, which is something that I think we share with Hong Kong Exchange. At the 2025, the Saudi market ranked #1 in the world, actually, in the number of IPOs. This is when it comes to the supply side. The second powerful engine is the demand side opening. And by opening, I'm referring to the change in the investor base in Saudi. The client base or the investor base have changed drastically from being a retail domestic market into an institutional and international one. The Saudi market was opened for foreign investors back in 2015. But at that time, there were stringent requirements for foreign investors to participate. We're talking about a minimum of $5 billion assets under management and a minimum number of years and experience in asset management. And the investor types were limited to banks and financial institutions. Fast forward, and the beginning of this year, our regulator, the CMA, have completely removed these qualified foreign investor requirements. Now the market is fairly open to all segments of international investors from all around the world. So this is when it comes to the demand side. Of course, with the inclusion in the emerging market indices, this played a critical role in inviting foreign investors and the increase of their participation in the market. Third is the debt market renaissance, because the equity market got the headlines for quite some years. But arguably, the debt market is as important. The government bonds and sukuk market paved the way for the corporate also debt issuances, which creates now two pathways for issuers to raise capital and come to the market for funding. So this is, in a nutshell, an overview of the market.
So you have the demand for listing, opening up to foreigners, and also developing the credit markets.
Yes.
In terms of working with Hong Kong, about 3 years ago, we saw this basket of policies, initiatives coming out from the two places. What are the developments since? Can you walk us through what's happened and what should we expect next?
Right. So our partnership with Hong Kong Exchange has honestly moved from soft engagements to real connectivity. And this goes beyond having a financial and bilateral agreement. I actually one time came across a metaphor that is not far from reality, describing the movement that's happening now to the Silk Road that has history of 2,000 years ago, where the Silk Road were to connect the Arabian Peninsula with southern China. Today, with these links and connectivities, we're not reinventing the Silk Road, but we're digitizing it in a way. So today, the ETF, the first actually ETF that covers the Saudi market is listed in Hong Kong Exchange. And it's tracking a lot of interest from investors in the region. Vice versa, we also have an ETF in the Saudi market that links the Hong Kong Exchange and the China Index. And this is the foundation, I would say, layer to many more products to be listed in the local markets. And we see always this interest from investors in China and Hong Kong in our markets, and also from Saudi investors to the Hong Kong and Chinese market. PIF alone have signed, I think, up to 50 billion US dollar of investments in Asian markets, and have increased their presence of 3 regional offices between Hong Kong and China, which also follows the Silk Road metaphor of not being a one-way traffic, but it serves both for the mutual benefits of both countries.
And what about the connected listings?
Right. So the next steps to follow as things that we can do together is, of course, normally the cross listings. And we're looking at this together with the Hong Kong Exchange and our regulators, of course, of how can we realize the cross listings between the two markets. We have recently launched the depository receipt regime and framework, which can help actually of listing of foreign companies in the local market. So we have this path, and we have the classical path of cross listings and having links between the depository centers in the two markets to be able to list companies.
Now I know that you want to be careful when in terms of what types of companies can qualify for the cross listings. We mentioned Emirates as a successful example. Yes. What do you see as the type of companies that could become successful candidates for these types of listings?
So as an infrastructure and exchange and depository center, we do not specify a type of company or a type of sector per se. And the first approval comes usually from the regulator to list a company. Having that said, today our requirements for cross-listing that the company needs to be listed in its home country first. So this is the first check that we need to run over, and then the disclosures and being able to comply with the regulations in the Saudi market. This is, of course, another important factor.
Mm-hmm. Now, I have to ask about war, the impact in the region, and how are you seeing that affecting money flows?
Right. So, with the unfortunate circumstances that the region have witnessed, an interesting actually observation we've seen in the market that there was an increased trend of foreign participation since the beginning of the year. And this hasn't slowed down with the war or the events associated with it.
When you talk about foreign participation, what is the definition of that?
When we say foreign participation, I mean how foreign investors they contribute to daily trades, and of course the ownership that they represent as a segment of investors in the market. So this is something that was a positive actually outcome that we've been looking at closely, and it's something that indicates that foreign investors are here for the long run. They are looking for the long-term investment objectives, and they realize that the current circumstances are basically backed by a lot of fundamental evidence, a lot of operational resilience that the market has, and a lot of diversity in terms of opportunities. We have today in the market algo traders and high-frequency traders, and they're growing actually in how much they contribute to the daily trades. Today, we have them as they reached 30% of daily trades are being done by algo traders, and you would see that algo traders are pretty much sensitive to all the events that happen. However, having that said, it's still an upward trend of algo traders together with the foreign participation. So this is something that a factual actually aspect that the market have lived.
Interesting you mentioned high-frequency trading firms, because Hong Kong is one of those centers that attracts a lot of these firms. Is this also something that Saudi Arabia is looking at, and what kind of policies, infrastructure are you building in place for these kinds of firms?
So absolutely, they are really playing a major role in increasing liquidity in the market, and we try to provide, from an infrastructural point of view, the tools that they need. For example, the low latency tools that they require to be able to execute, especially the high frequency traders. So this is something that we offer through our innovation arm, WAMAD. It's a subsidiary to Saudi Tadawul Group. And we see an increasing demand to these low latency services with the demand and the increase of the HFTs and the algo traders in the market.
And are you seeing a successful attraction for talent, for people who want to relocate to the region? Right. Has that been impacted in any way?
Actually, it was very interesting to hear about the talents and the different concerns around it in the previous panels, and the demographics as well. And this is something that I was hearing very carefully and thinking about the differences between the regions of the world in that matter. For example, the demographics in Saudi, we have more than 60% of the population under the age of 30. So this is something that is very powerful in terms of realizing the national economic development on a national level, you know. You expect these newer generations to be scientists and engineers to be able to keep up with how the world is changing, with also the AI and everything that we've heard this morning.
Yeah, 60% of the population so young. That would have huge implications in terms of how you develop policies,
right,
and the economy model, which is very different from what we're experiencing in Asia and many countries. So for our people in the audience, if they are looking to tap opportunities from the Middle East, what would your advice be for people who are looking at the next developments, what to look out for?
Right. So we've been very focused in Saudi to tell our story, our growth story to the world. And we've done this and realized some important results that put our market very clear on the map as an investable market, as well as aligned in terms of infrastructure and policy with the international markets. So when it comes to the equity market, we worked, of course, on different tools that institutional investors usually look for. One example is adopting the omnibus structure. Omnibus structure is very important for the back-end operations.
And that's for efficiency of administration?
Yes, absolutely. So it's much easier, operationally speaking, to be executing trades in an omnibus structure. So this is something. Another thing is that we've seen a very uptick and increase in the securities borrowing and lending and the short selling, of course, which follows normally. And it is adopted in the market in a way that it helped in the price discovery of the Saudi market. So it's something that institutional investors are keen to find in the market, and then we're making it available for our members.
On the short selling policies, what was the reason for developing these, allowing investors to participate in them?
So short selling is an important tool in any market because investors would invest long and short, and they have long strategies versus short strategies. I'm talking about asset managers, hedge funds, etc. So it's very important. Having a long market exposure is a bit limited for institutional investors. So it's a crucial aspect of what a market as an infrastructure can provide. And then on the debt market, which is a focus to us and our regulator at the moment, because we want to mimic the growth and the success story of the equity market, and we've done this. We've seen the trading activities have doubled in a year in the debt market. And if we consider the government debt market, it is now, as I said, included in the JP Morgan Emerging Index, which is an important milestone that, of course, brings international flows into the local market. We are now also linked with the international depository centers, which is the access, of course, for foreign investors to reach our local market and not having the need to open accounts locally, so they can invest through their accounts in Euroclear, Clearstream. Another infrastructure improvement that we've implemented recently is the OTC trading in the debt market. So usually the debt trades are done over the counter, and this is something that was really well anticipated by the international investor community and have helped increase the liquidity also in the debt market. So these are the main points of developments that we've worked on in the market recently.
So overall, the trend seems to be relaxing rules and also development of different asset classes.
Absolutely.